Hello everybody. When it rains, it pours. What does it mean? When you have one set of negative news coming in, you will have a lot of other negative news as well coming in at the same time. And that is exactly what is happening with Adani as well today. Well, the entire set of negative news started flowing on Jan 23rd when Hindenberg Research released a report stating that, hey, there is potential scam, accounting fraud, stock manipulation happening at Adani. And that negative news just continued to come out in the last few weeks. In this video, we are going to look at three such news that came out in the last few days. The first one is Adani's statement released by themselves where they said, we are cutting down revenue growth targets and capital expenditure in the middle of the row sparked by Hindenburg. Now, what does this mean? Let's start with a simple example. Well, if you are a Kirana store owner and your overall revenues are, let's say, 6 lakh rupees per month, and out of that 6 lakh rupees revenues, you are earning a profit of, let's say, 30,000 rupees. Now, in that 30,000 rupees, you have your own personal expenses, whether it is your rent, whether it is your own your food or petrol, whatever other expenses. And if you save, let's say, 1,000 or 10,000 rupees, you will invest that 10,000 rupees back into the business and you expect that 6 lakh sales to increase to 7 lakhs or potentially to 8 lakhs. But you know it is not very easy. In the case of Adani, this 6 lakhs is growing at almost 100% from the last few years. The 6 lakhs became 12 lakhs and 12 became 24, 24 became 48, and that's the growth rate. And for that, the profits have to be extremely high so that they can put that money back into the business. But unfortunately, that is not the case. Let's look at example Adani Enterprises. They have grown by 140% in the last 1 year. You know how difficult it is to grow by 140%. And the sales are 1,22,000 crores, 1,22,000 crores, and the profit is only 1,200 crores. So even if you put in all the profit into the company once again, you can't grow at that rate. The only other way in which they can grow at this rate is by taking a loan. You go and ask your friend, hey, can I get a loan? I believe in this business. It will definitely grow. Why don't you give me a loan? And these guys are also taking a lot of loans. Now, if you look at another number on this chart, this is 42.87. On average, all the Adani group of companies have grown by 42% in the last 1 year. That is, if your overall sales were 6 lakhs, it increased to 8.4 lakhs. That's the growth rate that almost all the companies on average have grown by. Very difficult, but these guys have grown low profits, but through loans, the debt that they are accumulating. Now, the point is when they said we are not going to grow at 40%, but we are only going to grow at 15 to 20%, which means they are going to take less number of loans. And the question is, are they taking less loans or is anybody giving them a loan or people are not giving them any loans? That's a question that we need to ask. Now, what's the implication of this entire scenario? Well, people might not be ready to give loans, which means they cannot grow. And this also means the stock prices will fall down further. And why is that the case? Because stock markets are not about what is happening in the business today. Stock markets are about what can potentially happen in the business going forward. For example, if you take Zomato, it's a loss-making company. Nobody should go and buy Zomato shares because it's anyways not generating any profit, not even a single rupee of profit. But people still buy Zomato shares because they believe the company will generate substantial amount of profits going forward. It's the belief and the market sentiment which is driving the stock prices. Now, with the case of Adani as well, nothing is different. They believe that Adani will continue to grow at 40% year over year. And now when Adani is cutting down the growth target or the growth rate, which means the stock market prices will also get adjusted for all the Adani shares. And that is why when these growth targets are adjusted, potentially the share prices will also go down. And there is also a question remaining, that is, say, is it by themselves that they are saying will go down on a lower growth rate, or is it because nobody is giving them these loans? Now, moving into the second set of news, which is related to Total Energy. Total Energy is one of the largest oil companies in the entire world, and their revenues for 2022 were $205 billion, which is close to 1,60,000 crores. And they are partners with Adani on multiple ventures. And one of them is Adani Green, and these guys have close to 20% stake in Adani Green. They also have 37.5% stake in Adani Total Gas. These two are listed entities on the Indian stock market. There was also a potential new deal that was about to happen between Total Energy and Adani in the space of hydrogen projects. That deal was worth close to a $50 billion project, and Total Energy was supposed to take 25% of the project, which means a $12.5 billion was supposed to be coming from the Total Energy. And now, because of all the negative news coming in, Total Energy has said, we did not sign any papers, so we are putting this particular contract on hold until this entire issue is resolved. Now, the point is, it is not about the $12.5 billion or the 25% stake that they were going to take in this entire company. The problem is also that because this is a bigger organization and the world believes in the Total Energy, the loans that these guys could have gotten could have been at a lower interest rate. And one other interesting factor is that Total Energy was about to sign a surety signature or a guarantee signature for 50% of the loans that this hydrogen project was about to take. And now, with Total Energy out of the picture, who is going to sign on these loans as a guarantor? Well, if Adani themselves sign up, then their image itself is pretty shaky right now. So they might have to pay more interest rates. They might have to pay higher interest rates on these loans. That's an issue. So they're not just losing who is about to give them money, but also who could have potentially helped them secure loans at a lower interest rate. Now that is the bigger problem. Now moving on to the third news, there is something called as additional surveillance measures. Now what does this mean? Imagine a traffic light, and there need not be a traffic inspector at the traffic light if the traffic is flowing as usual. For example, on a Sunday morning 10 a.m., you won't find a lot of traffic people on the roads because the traffic is less and there are not too many blockages on the roads. Similarly, if you see stock markets, the stock trading continues to happen on a daily basis without any kind of regulatory overview or monitoring done by a class monitor or somebody called as a governance body. But when some unusual activity happens in the stock market, like how it has been happening with Adani over the last few days, then there is a governance body which says we will monitor these stocks closely, and they call it as the ASM list, Additional Surveillance Measure list. And 3 Adani stocks were on that list: Adani Ports, Adani Enterprises, and Ambuja Cements. In the last week, Adani Ports and Ambuja Cements were off the list, but still their biggest company, Adani Enterprises, is still on that list, which means there are potential issues related to trading in these stocks. Now, the point and the few business lessons that you can take away from this entire conversation. Number one, if a company is growing based on the debt, based on a loan, it's a very high risk proposition. You need to ensure before you go invest in any company if this is a loan debt driven growth or if it's an organic growth where they are just continuing to invest their own profits in the business. Please do that due diligence right from the start. This entire Adani exercise, the example, is a very clear indicator of the amount of risk associated with debt driven companies. The second thing, corporate partnerships are not just about, hey, how much one company is putting in the money and how much the second company is taking and using that money for. No. Corporate partnerships deals go into much finer details. For example, in this scenario, it is not about how much money Total Energy would have put in. Some other company could also put the same amount of money, but the trustworthiness that Total Energy has in the overall market means lower interest loans for Adani. Similarly, a corporate partnership, finer details is what you need to study when companies announce acquisitions or mergers. The third lesson that you also need to know is that there are these corporate governance measures like ASM, Additional Surveillance Measure, kind of metrics which can help you understand if it's a risky investment versus if it's a relatively safer investment. Learn about these governance measures before you go and invest in any kind of financial instrument. I hope this video makes sense to you. Please go ahead, click on that like button, and also let me know if there is any other information that you want me to cover about Adani. Take care, guys. We'll see you again tomorrow. Bye bye.